A majority of Americans are running a marathon with two concrete blocks stuck to their feet. And let's call them the inability to take on debt because of a low credit score or having too much debt and not enough income to pay the bills. So we're going to knock out two birds with one stone in this video. I cash flowed everything in college: car, tuition, groceries. Uncle Dave would be proud. Then I saved up and my wife and I stepped up to the plate to buy our first house. She had a great credit score and I was naively shocked that mine was non-existent. No credit to be found. But I pay my bills. Wasn't that enough justification to give a recent college grad a loan for hundreds of thousands of dollars? And some of you literally may be having a similar experience, or you maybe that may be in your near future. But it's an important part of my history. And maybe hopefully you can learn from my mistake. So nearly half of Americans have a credit score of 750 or higher. Okay. I had a non-existent credit score because I had never really ever had a credit account. I never had a credit card. I never had any debt to my name. I always bought used. I always paid in cash and just sort of like was off the radar until I became a young married adult and was trying to just adult in this world. And so an average score of 716 would be a good score by FICO standards based on, today's estimate. So credit scores, they're like a grade for your borrowing history. Okay. They fall between 300 and 850, and the higher your score, the better your ability to take on debt is. And you get better interest rates on loans. You have access to better credit cards. You get perks, all this kind of stuff. You're just, basically graded as a better consumer. It's not the truth. It's not gospel. It's not something to necessarily live by. I don't even really like it that much, but it's the way we live and it's in the world we live in. And if you find yourself trying to buy a house out of college and you've never really had to make payments on things other than just paying for cash for like your cell phone bill, or if you're splitting a room with a roommate, which was definitely my experience, then you may run into a brick wall of not having any credit. So here are some examples of how to counteract that and build up your credit. All right, as promised, here's 3 ways that I've helped build our family's credit. And hopefully this is something that you can benefit from directly as well. So the first is to make on-time full payments. And plenty people have this false mentality that you're going to need to carry some sort of balance. And you want to keep your credit utilization low. And so when I look at this and I say make full payments, I'm talking about trying to keep your total utilization in the single digit percentages. So let's say that you have overall the ability to spend $10,000 worth of credit, like your credit limit. Let's say you've got one card, it's got a $10,000 limit. Well, you're going to want to try to keep your use of that card below 10%. And really, it'd be great if you were hovering around, let's say 2 to 3% of what's available to you on that credit card, and then pay it down, build and pay. And that's collectively across all your lines of credit. And number 2, you want to keep your unused credit accounts open. And the reason for this, and this is one of the big reasons why some people in older generations have great credit and average credit score for each generation goes up and up, is because they have longer account ages. If you have a credit card, and let's say it's got a $95 fee, then you can cycle that down in most cases to a fee-free credit card, and then it can lay dormant. It can be something that sits on your account, or you can use it on occasion and pay it off in full. But you want to cycle those cards down and still keep them open. Too many people close accounts. And this is a big reason why, like I mentioned before, the older generations have better credit because they've had a card open for a few decades, whereas maybe you've only had a few years to be able to build up some of the average age. But if you're looking to build your credit over the course of the next 6 to 18 months for, maybe a car, your first home, then this average age you want to have established. And the opposite kind of works as well, where right before you go and you try to get a mortgage or try to take on some additional debt, then don't open up a credit card right before that process because that's going to lower your average age. So in a best case scenario, you turn 18, you have one credit card, you hardly ever use it, and you just roll that along until you're ready to buy your first home. And then that's going to build up a large amount of credit. You make full payments on it, you use it to buy a pack of gum every once in a while, at the university center. And that's a typical good methodology for building up credit if you're younger. Now, the third way to credit is going to be to keep track of your score, to keep yourself informed of its development over time. Man, you can use apps that are going to help you keep track and maybe even give you some other tips that are going to be more targeted and specific to where you're at. Like, hey, don't open another account in a certain amount of time if you're planning on making a big purchase or taking on additional debt within the next 18 months. And so it can give you specific kind of guidelines, but these are also what I would consider descending level of importance. Right on top, you need to be making full payments. That's the number one way because your credit score is really just a grade on your likelihood to go past due on a payment by 90 days or more. So your credibility as a consumer is really just how likely is this person not going to pay their bill and have it go past due for 90 days. That's what this is asking. And so, do some soul searching. I think that it's a situation where, like I mentioned in my past, how it was a shock to not be able to take on additional debt because of my credit score. And meanwhile, I had a ton of money in the bank and I was ready to make this big purchase and it was a hindrance to me. But, you got other people out there that already had a ton of debt and nothing in the bank. And I thought, well, how in the world are they going to get a loan? Well, it's because they had that track record. And it's unfortunate. It's the way our systems works. It's worked for about a little bit longer than I've been alive. And you think this has been around for 100 years, but it's relatively new. It changes over time. So this is the basic foundational information that you can take and build great credit with. Now, to sum things up, here's 3 things we do to help us when we're in this credit game. So the first thing is to have a card that helps build your credit. And I know this is a controversial topic, but if you're super anti-credit card, pro Dave Ramsey, super prone to just gobbling up debt, then there's debit cards out there that will help you build your credit. And they're great solutions for someone if you want to avoid credit cards altogether. More power to you. I don't think it's worth it the risk reward is not high enough. So the second thing is to check your score regularly. Okay. And this is going to be something where if you have a resource like a credit building card, you can have an app on your phone that is going to give you alerts, is going to monitor your credit score. Use something like Credit Karma. It should be free. Find a free solution to monitor your progress and make some tips on how you specifically can be implementing some of the tools and examples that we outlined. And then finally, you're going to make payments. And so there's, 2 different ways of going about this. You can once a month, check the statement, pay off the balance, don't carry over a balance, and try to keep that utilization low, like what we talked about. Or option 2, you can go nuclear like what I do. And I go every Monday morning, check all the balances, all the transactions, all the accounts, the cards, the banks, the savings, everything. And I just do a whole audit on all our financial stuff. And after a few times, I tell you what, it takes me maybe like 90 seconds to check all of our accounts across everything, pay off all the balances and keep our utilization low. And it gives me peace of mind. So if that's a possibility for you, why not try that for a little while? See you, every week, every other week, once a month. One of those needs to be able to work for you. You just got to get into that routine. And so go ahead and send me your tips, your favorite cards, your hacks, and I want to learn from you. I want to hear what kind of insights you have for me. And if you have any questions, you can find our most direct Q&A link at the bottom of each of our weekly newsletters. Link in the bio to subscribe to that. And you can always drop a comment on any of our channels, any of the social media feeds, but the best way to reach me is going to be at that Q&A link at the bottom of the newsletter.